I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest on the show, just head on over to missionmatters.com and click on Be Our Guest to Apply. All right, so today I have David Garofalo on the line, and he's CEO of Gold Royalty Corp. David, welcome to the show.
Nice to be on, Adam. Thank you for having me.
All right, David. So excited to have you on the show today and to learn more about Gold Royalty Corp and also to learn about royalty investing in general. So lots of individuals that watch this that are investors that are looking for different exposures to gold in the gold market, and maybe they haven't explored royalty investing. And if they have, then this is going to be another potential opportunity that's introduced to them. So David, excited to get into this. But before we do, we'll start this episode the way that we start them all with our Mission Matters Minute. So David, we at Mission Matters, we amplify stories for entrepreneurs, executives, and experts. That's our mission. David, what mission matters to you?
Well, my mission is to provide investors with exposure to a rising gold price while insulating them from inflation in the general economy.
Mm-hmm. Love bringing mission-based individuals on the line to share why they do what they do, how they're adding value, not only just in the marketplace, but in the world. So great to have you on. And just to get us started, I guess let's go a little bit further back in time, David. Like, how did you get started on this path to Gold Royalty Corp and into this business?
Well, I've been in the mining business for 32 years, principally in a mine development and mine operating role. I've run large cap companies in both the base and precious metal side, building and operating mines. And now after 32 years, I've positioned myself in the royalty business because we're in an inflationary environment. I think operating margins in the mining business are going to be squeezed. It's becoming an increasingly difficult business to grow in, whereas royalty companies provide that top line exposure, optimum exposure to the gold price, exposure to exploration upside, while completely insulating our shareholders from operating and capital cost inflation risk.
So we will definitely go further into the model. I want to learn more about the royalty model, and we'll delve deeper into some of the things you just mentioned. But I guess what attracted you to mining? I'm always just so fascinated to how people get into mining, all professions, of course, in different areas of money, but mining specifically, over 30 years experience, like how did you kind of fall in love with the mining side of things?
Well, look, it's a great question. I started out as a CPA back in the 1980s with Deloitte's and fell into the mining business in a very junior position. And it's hard not to in Canada. I'm based here in Vancouver, but grew up and spent most of my career in Toronto. And Toronto is the mining capital of the world. If you're in Canada, you fall into natural resources quite organically. It's a trees and rocks economy principally. Yeah. And so it's easy to find opportunities in the natural resource sector. It got into my blood. I got involved in a junior accounting position, but then got involved very quickly in mine development from a commercial standpoint, both in terms of preparation of feasibility studies and going out to tender on major contracts and handling all the financial elements and the financing of major mine construction over my career. So I really learned the business from the ground up. And ultimately that led to the C-suite for me for most of my career.
Yeah, it's so interesting. A lot of people that I've met in mining and even that I've had on the show, they start in these very, finance type positions. And then to me, and again, I know there's no proof in this, but I'm like, I was a financial advisor. So I was always, inside. And I'm like, okay, so if I would have went towards the mining direction, maybe I would have been able to get outside a little bit, go see it, go touch some dirt. I mean, there's just something to be said about the physical part of mining, in my opinion.
It's a very capital intensive business. We're constantly building, exploring, expanding. We're always putting capital to work, looking for good rates of return for our shareholders, but it's a very dynamic environment in which to operate because of how much time we spend building out and optimizing new mines.
I want to take a moment and let's talk to maybe that next generation that's coming out in finance and otherwise, and they're exploring different things. You've made obviously a great career in mining and just in this sector. What kind of things would you tell to that next generation that's out there and exploring just about the field in general as a career?
Well, look, I think it's a dynamic place to be because it's such a capital intensive business. We're constantly in the markets, both debt and equity markets, looking to raise capital to perpetuate our business, grow our business. And so there's a lot going on all the time. The
Mhm.
lead time from discovery to first production is typically 15 to 20 years. So the life cycle of a mine is quite long. And if you're operating a company that has a diversified portfolio of assets from early stage exploration right through to production, you're in that perpetual state of developing, advancing, de-risking assets, raising capital. It's such an exciting, dynamic environment to be in. The other thing about natural resources is you're finding something in the ground that people didn't know existed before, and you're creating wealth out of something that was nothing before. You're drilling out, you're finding things. It's very exciting from that perspective. It creates a lot of value, not only for your shareholders, but for stakeholders generally, the surrounding communities, the governments in terms of tax revenue. It creates an economy. You can't have a secondary or a tertiary element to your economy unless you have a primary part to it as well. And the primary element of it is really foundational to any advanced economy in the world.
Yeah, it's just a such an exciting industry, and your passion. I mean, it comes out for that you love what you do, and it just comes out. And I feel like a lot of people in that sector have a real passion for it. So it's always interesting to me. Shifting focus slightly here. Let's go. Maybe we start this conversation, David, a little bit higher level, just talking about the royalty model in general, and then we can build on that, because I don't want to assume that all of our audience has really invested or looked at the royalty model as a spot to maybe diversify their gold exposure or holding. So maybe just explain a little bit about the royalty side of things.
Well, the way I look at precious metal royalty companies is they're really like a bank that's specialized in the mining sector. We provide capital to the explorers, the developers, and operators that are looking to build, expand, or optimize their existing operations. And rather than expecting to get that capital back in terms of repayments like a loan, we take a royalty, a perpetual royalty on that mine, not only in the existing reserves and resources, but any exploration upside. So there's a lot of optionality in the royalties that we take back. And so it's really almost like owning physical gold, but with exploration upside. So you could buy the GLD ETF on New York Stock Exchange to get that physical gold exposure, but this gives you the upside that comes from exploration. So it provides optimum leverage to the gold price because
Mhm.
we get a fixed percentage of the revenue, the top line, but it completely insulates our shareholders from operating capital cost inflation risk while giving them that exploration upside.
Mm. So I don't want to, and for everybody watching, of course, for your individual situation, you want to consult with your financial advisor, your financial consultant. So, but just to speak in general terms, David, like what are some of the benefits of maybe getting the royalty exposure side of things?
Well, again, it provides you that upside to the gold price. So if you
Mm.
believe gold is an asset class you want to invest in, this gives you the opportunity to participate in that upside because, again, we get a percentage of the revenue. So as the gold price goes up, our royalties go up. And if the operating partners that we're financing are successful in their exploration efforts and extending mine life and finding new deposits on the property that we own royalties on, we get that exploration upside as well. But because we don't get a percentage of the profits, we get a percentage of the revenue. It really doesn't matter what the operating cost structure or capital cost structure of the mine is.
Mhm.
We own 192 royalties, and those are across a broad array of properties from ones that are currently in production right through to early stage exploration, and they're fully paid for. And once we own them, we own them. We don't have to put another dime into them.
Yeah.
And so if the operators are successful in their exploration efforts of de-risking the assets, building them, expanding them, we get all of that upside without having to put any more capital into it.
Mm. And so, and thank you for that. I feel like it's a great overview and in its own masterclass. You put a bunch of content in that little bite-sized piece. Somebody, if you didn't catch that, like listen to this one again, because it's definitely an interesting space to think about investing in. So I guess switching focus slightly here. So how does this play? Going into an inflationary environment, like how does this play into inflation and maybe acting as a hedge?
Well, look, gold has naturally been a hedge against inflation because gold is really not a commodity; it's a currency. And in an environment where we have a competitive debasement of fiat currency happening underneath our noses, with all the central banks printing money with reckless abandon, and that's really been a phenomenon that's been in place since the credit crisis over a dozen years ago.
Mhm.
Gold is the one currency you can't print. It's very finite in quantity. There has been 200,000 metric tons of gold that's been mined since the beginning of time.
Mm.
That's tiny. It fits into 4 Olympic-sized swimming pools. and we only mine an additional 4,000 metric tons per annum. So about 2% added to supply every year. And there isn't any elasticity of supply to price given how difficult it is to find, build, and operate new mines. In fact, reserves are down 40% from the peak in 2012 because of the underinvestment the industry has taken into exploration and new mine development. So as a result, even as the gold price is going up in response to the inflationary environment we find ourselves in, mine supply is actually continuing to decline. So that's hugely supportive to the gold price. So in an environment like this, where inflation is accelerating as much as it did in the late 70s, we went through a huge inflationary cycle then. Many of the same dynamics are in place. We had oil shortages, which we have today because of an embargo from Russia. Back then, we had embargo from the Arab nations. We had supply bottlenecks back in the 70s. We have them today. We had lineups at gas stations back then. We have them today. We had empty shelves in grocery stores. We have that today. We're seeing that history may not repeat itself, but it certainly rhymes. And in that environment, gold went up dramatically. And in that inflationary environment, it provided a hedge for investors against inflation. And we're deeply into double-digit territory with inflation. The headline numbers we're seeing today of 7.9% vastly understate the reality on the ground because our food prices, our housing prices, our gas prices are going up double-digit. So we're seeing much higher inflation than the CPI, which is constantly manipulated, really indicates. And so gold provides you a hedge against that. And I do believe that in this environment, gold could go to $3,000 and beyond, which would be the real all-time high in gold when you look at the $850 an ounce we realized in the last inflationary cycle in the late 70s, and inflation adjusts that to $2022.
Yeah, and I think very few people watching this would disagree on that statement that that inflation's much higher than what we're seeing and just go to the grocery store, anything, anywhere you're going. I mean, I'm shocked pretty often. I'm sure everybody else watching, depending where you're at, are shocked as well. It's something else to see, and I like how you mentioned it may not be repeating itself from the 70s, but it does rhyme. It does rhyme, and so I guess there's some things that we learned back then in terms of gold and how it reacted and the potential that it may react the same way this go round. So I think all interesting observations. And I want to spend some time talking about Gold Royalty Corp, so your company specifically. So maybe start off by just telling us a little bit more about the company.
Well, we're only 1 year old. We IPO'd on the NYSE American a year ago and raised $90 million US and achieved a post-money valuation of $200 million at the time, with an initial royalty portfolio of 14 royalties on 12 development stage assets of our former parent company, Gold Mining Inc. And those assets collectively had about 32 million ounces of gold resource on them, so a substantial mineral endowment. But having gotten that currency and recognizing the need to achieve scale quickly to drive down our cost of capital and be competitive for new royalty opportunities, we went about starting to consolidate what's a fragmented industry. We have a lot of small cap royalty companies in the sector. And then last year, we've actually taken over 3 of them and launched a bid on a 4th. And that saw us quadruple our market cap and also increase our royalty portfolio almost 15-fold, from 14 royalties to 192 royalties today. 28 of those royalties are either in production, cash flowing currently, or in construction and development. And beyond that, we have a broad array of royalties from early stage exploration right through to feasibility that provides us a lot of embedded growth. And as I said earlier on, those royalties are fully paid for. So that growth doesn't require any more capital from us. It'll deliver growth for many, many decades to come.
What were some of the things that you were looking for when you were thinking about those acquisitions? Like, what was the thought process behind this?
Well, we're looking for assets that are much closer to cash flowing than our initial royalty portfolio afforded us. And we succeeded wildly in that regard. And again, introducing 28 royalties into the portfolio that are either cash flowing or expected to be in cash flow. And that cash flow growth has been so pronounced that less than 10 months into our existence, we actually introduced a dividend into the story. We now pay about
under a year. Am I hearing that correctly?
That's correct. And
wow.
we pay about a 1% yield, which is a modest start.
Mm-hmm.
But given our revenue growth profile, which is expected to grow at a compounded average rate of 60% per annum,
Mm.
We have a high degree of confidence we'll be able to grow that dividend over the next several years quite dramatically.
No, that's great. And congratulations, by the way. Like to be able to accomplish that in year one, I think it must speak volumes about the management team and the people that are, that you're working with. Can you maybe comment a little bit about that?
Yeah, no, for sure. I mean, I'm as happy about curating the people we have in the organization as I am about the assets we've been able to acquire. Collectively in our board of management, we have over 400 years of mine industry experience.
Mm.
I have 32 years, but there's a lot of people on my board of management that mirror my experience in terms of years in the industry.
Mhm.
And many of us have been in mine development and operating roles, much like myself, which gives us a unique perspective on any royalty opportunity we're looking at. We understand how operators think. We understand that the risks that they're facing.
Yeah.
As a result, we can appropriately price the risk that we're taking on as providers of capital and getting royalties in return.
Mm.
The other thing that seniority provides us is access to anybody in the mining industry globally,
Mm.
which gives us opportunities to beat the crowd in terms of getting at royalty opportunities. Virtually everything we've acquired in the last year to expand that royalty portfolio so significantly has been done on a bilateral basis. We've avoided competitive processes, which tend to drive up prices and drive down returns for our shareholders. And that's really been a secret to our success.
Mm. I want to ask a question on the behalf of maybe some of the investors out there, especially those that have either been, looking at different precious metal royalty companies or maybe haven't, and they'll watch this and they'll think, okay, I need to look a little bit further into this. I've been thinking about exposure to gold anyway. What are some of the characteristics, just in general, that investors should be considering when they're looking at a precious metal or gold royalty company?
Well, I think what you want is liquidity and scale, which we've been able to achieve very, very quickly. We went from a $200 million market cap company in the IPO to almost 600 today. And we trade anywhere from $3 to $5 million per day on the NYC American. So that means that you can readily get in and buy major positions and readily capture profits when you want to get out and capture those profits. You're not worried about being in a roach motel. There are many companies in our sector, unfortunately, that are like that. They're small cap, they're liquid, they trade by appointment. So it's hard to accumulate positions without moving the share price. And it's certainly very, very hard to exit when you want to capture your profits. And I think that's important. But scale also begets more scale, begets more liquidity, lowers your cost of capital by increasing your multiples. So capturing that scale to us was really an integral part of our strategy when we launched the company. We wanted to get big quickly so that we can be competitive with the larger cap companies in the space as we look at new royalty opportunities.
Wow, David, what a great story. And I know a lot on your plate with growing this dividend and with scaling and with acquisitions. I just have to ask. So what's next? I mean, what's next for you? What's next for Gold Royalty Corp?
Well, we've gotten off to a great start, and it's looking at perpetuating the growth in our business. This industry is made up of a small number of large cap players. There's three companies that I would characterize as large cap: Franco-Nevada, Royal Gold, Wheaton Precious Metals. And then there's everybody else. They're all small cap. There is no mid tier. And if we can capture the mid tier, which is, say, $3 to $5 billion market cap, which is big enough to matter to a broad array of institutional investors, but small enough to grow meaningfully, then we think we can capture the best multiple in the industry, even better than the senior companies enjoy, because of that growth element that the seniors simply can't deliver. They're just too big to grow. That's the opportunity set as we see it, and that would come with a significant re-rate for our shareholders.
It's great. So if somebody's watching this, David, and they want to learn more about Gold Royalty Corp, what's the best way for them to do that?
Well, it's super easy to remember. It's goldroyalty.com. Don't hesitate to sign up for our newsletters. Send us emails in our general email delivery box. Call our 1-800 number. I quite often respond to those personally. I like talking to investors and see what's on their minds and be able to articulate the story to them. And we're GROY on the New York Stock Exchange American.
Fantastic. And we'll put all that information in the show notes so that our audience can just click on the links and head right on over and check out Gold Royalty Corp. And speaking of the audience, if this is your first time engaging with the Mission Matters platform, We're all about bringing on entrepreneurs and executives and experts and having them share why they do what they do, like what excites them, like what gets them out there into the marketplace to really make a difference. If that's the type of content that you're into, or if that excites you at all, we welcome you to hit that subscribe button, because we have many more mission-based individuals coming up on the line, and we don't want you to miss a thing. And David, really, it has been a pleasure having you on the show, learning more about Gold Royalty Corp. Happy to bring that information to my audience, and happy to continue to watch this rise. So again, congrats on the growth, and wishing you continued success.
Thanks, Adam. Thanks for having me on.